We are live. There we
Is
go.
are the what's the name of that baseball team in Cleveland?
The Guardians. They just traded Shane Bieber. So
Are they gonna is the team gonna change their name back again?
they might change it to like the Gamblers with all these pitchers they have that are this has been a nightmare season for the tribe, honestly. So, but Trump, yeah, he was advocating that we change our name back, which I like that. But the team didn't seem to they put out a statement saying basically what's done is done and moving forward.
Go pound sand.
Yeah, moving forward, the Guardians name and likeness. So, but
Well,
yeah,
right now I'm near Squaw Valley,
Squaw Valley.
which is a ski resort near Truckee and Lake Tahoe.
Yeah.
And I don't know if anybody they call it something else now, I believe, but everybody verbally calls it just, I'm going to go Squaw Valley this weekend or whatever it is. So I don't know.
There you go.
Is it
And then they go down to the Gulf of Mexico to sit on the beach.
the
Anyway, we digress.
two best places to be?
All right. Well, let's go ahead and get into it. This is the big picture, presented and sponsored by our great friends and partners at Depth. Nearly 2 decades of being the trusted communications and marketing partner for the fintechs reshaping housing finance. Their fearless leader, Carrie Milam, really a trailblazer in this industry, in this space. Her EVPs, Leslie Colley and Lindsay Neal, outstanding pros, the best at what they do. And if you need your story told better, help with strategic communication, brand management, public relations, give the folks at Depth a shout out, depthpr.com, or just get a hold of Rob or I, and we will make sure to connect you with the fine folks at Depth. So,
I second that. They're
Um,
amazing.
and Chris, a happy Depth client, Vice Capital, right?
Very, very happy one. Absolutely.
All right.
yeah.
So,
So the Michigan Mortgage Lenders event coming up, the industry wonders. I think 200 people almost have registered, which is very good. The Everybody's wondering if Todd Potter, a longtime Michigan fixture, is going to show up or not.
I hope so. He just moved down to Florida a little bit ago, so hopefully he'll be back and forth.
Yeah,
It's in the
yeah.
beautiful city. I don't know, Rob, if you've been to Frankenmuth, Michigan before, where it's being held, but it's an old, it's modeled after an old Bavarian village. It's super cool.
I'm saving my pennies to buy Christmas ornaments, pretzels, and beer.
All right. I like it. I like it. And Todd Potter just put in the chat that he'll be there. So good.
on
Yeah,
cue, Todd Potter in the chat. So,
and Chris, you'll be wearing your lederhosen, right?
I don't know about that. I will be wearing a swimsuit though for the adult swim up bar part that's going to be on Sunday night. So maybe
I didn't get that
treat myself.
memo.
Was that? Yeah, no, absolutely. It's actually my
Really
girlfriend and I
done.
went up to Frankenmuth and checked it out, and it's very cool. Really nice swim up bar. The water's like 93, 94 degrees, so not a hot tub, but you won't be chilly at all. You can even go through this little door, and there's a big pool outside that's also 93, 94 degrees. Take your cocktails out
Probably
there. It's a blast.
probably gets warmer after every mortgage event that's held in the pool.
It'll be great.
uh, introduce our crew.
Oh boy.
As always, join my esteemed colleague and co-host who didn't get the pool party invite, evidently, Rob Chrisman.
No, I think it's too late for me to get in bikini shape.
I heard the sponsor specifically requested, to not extend the invite to you, but
The sponsor being Frank's Chlorine Company. Anyway,
and this week back, I think this is the fourth time appearer on the big.
Fantastic.
It is.
I was wondering if there was if I do get invited back another time, depending on obviously how the performance goes today, if there is like a velvet jacket available or a robe. Just kind of throwing that out there. I'm not sure kind of what the budget looks like for the show, but
Yeah,
I look good in velvet.
as long as you agree with all my anti-Powell takes, you'll be invited back, and we'll get that velvet coat for you. So there we go.
Totally fair. Always appreciate
And
being
even
on.
properly, it is the principal, the founder, the owner. Vice Capital Markets, one of the leading hedge advisory firms across America, do an incredible job. Was my hedge advisory firm for decades as a lender. It is Chris Bennett. Chris, great to see you, and thanks for coming back on the show.
Hey, really appreciate you guys having me. Thanks so much, Rich.
Once again, well timed with the Fed meeting this week. We wanted to have Chris on to Rob, your hand is up.
So, Chris, what does it say on your business card? Does it say principal? Does it say founder, CEO, president? What director?
It said many of those things. Like Rich, I have a number of hats. I guess they're just all with the same company. It says chairman now.
Chairman.
Yep.
All right. Okay. Sorry, Rich. Go ahead and let's get into why would the Fed cut rates with full employment? But go on.
Well, of course, Rob, a lot of economic news this week, headlined by the Fed's decision to once again hold the fort yesterday. GDP a little hotter than expected. Inflation data, we got core PC this morning, was pretty much in line with what was expected. Jobless claims this morning, again, was up, I think 1,000 from last week, but a few thousand below the expectation. So kind of right in line. The road to Housing Act, 24-0 emerges from Senate banking with a lot of good stuff for housing in it. I thought that was really positive. There are now 6 bipartisan bills in the House, in Congress right now that are active. So something, it's been a lot of gloom and doom and viral stories that we've been chasing and following here in the big picture, but some positive rays of light beginning to emit. So of course, Rob, I throw all that at you, and and ask for your reaction. I'll give the slight counter. I mean, first we had 2 people dissent yesterday, including, I would argue a large percentage of Americans would dissent if they were polled on what the Fed should be doing. But and I get it, right? Okay, it's the economy's still looking okay on paper. My take with the data and the stale data they use, and I'm sure that'll come up at some point in the show. But I just think like symbolically what it would do for America and housing. Housing is such a huge part of GDP. And give me, I understand you lower the Fed funds rate and mortgage rates are not coming down. The last time they lowered rates actually went up. That said, Treasury market, 10-year and the 5-year rallying into the teeth of a cut, basically saying, Powell, come on, almost against him. Lower costs for small business borrowing, lower our interest on the debt. You're starting to see, credit card debt is up and early stage delinquency. I mean, and then of course you have that the Fed and their stale data waited like they are now 6 months too long in 2021 to send us down this mess. So Rob, convince me that I'm wrong, that they're not waiting too long here. And I passed the baton.
Somewhere in there was a question, but with regard to convincing you, otherwise, I think that, first of all, like Rich, do you agree that the bond market will move in the direction before the Federal Reserve moves?
Generally speaking, but I think part of that is like what they think the Fed will actually do, like the reality of what they'll do and how it will impact the situation. So yeah, I think that that it's all of that.
Yeah, I think that the bond market and traders and investors and so forth will, the bond market will move before the Federal Reserve. I view the Federal Reserve's actions as more of a lagging action, lagging indicator, and the bond market will be there before the Federal Reserve. The bond market is not convinced that, given the stock market continuing to set highs, given that we are basically at full employment, given that inflation is moderate, given that the housing market is not tanking, given that, the list of economic indices.
Market is, not tanking. I mean, the housing market is a hot disaster right now. I mean, you can't buy a house in America unless you're like a millionaire. I mean, I would say that's pretty bad.
Well, so that the Federal Reserve doesn't set house prices. And I will argue that the Federal Reserve doesn't set mortgage rates. The last time I think the Fed moved, mortgage rates actually went up. We don't want to see that, right?
But
I
your
would
earlier,
also,
The bond market has rallied. The 10-year Treasury yield has gone from 450 to 434 in the last 2 weeks. So, I don't know. It has rallied into this non-cut, for whatever that means. So,
Just a
It
little
kind of
bit
depends
though.
of, are you the little sawtooth that we see up and down in rates? Do you define that as a rally, I guess, right, too?
Yeah,
Yeah.
I agree with Chris. It's been in this band for months and months and months.
fair.
The I will also argue, if I could finish my thought, Swerbinsky, that the Federal Reserve is going to do whatever it's going to do. I would say that if the Federal Reserve cuts by a quarter, I doubt if Nordstrom's and Macy's and Shell credit card, if they're all going to cut their interest rates from 28% down to, 27 and three quarters or 27 and a half. Credit card rates are going to stay high. I would argue that mortgage rates are going to stay high. And remember that I will disagree that we're in a housing crisis and that it's a hot mess. I would say that affordability is an issue. Certainly, inventory has been increasing. There are homes for sale. I drive through neighborhoods, lots of for sale signs now. The question is, if you look at insurance, if you look at HOA fees, if you look at special assessments that condo owners have to pay, if you look at just property taxes, the affordability issue that we talk about all the time, I would say that the mortgage world is only a little tiny piece of that. And so much else of it has to do with other problems that are out there that the Fed can't fix, that we as an industry can't necessarily fix. So those are my 2 cents. I don't know what, as I said earlier, we're at full employment. The stock market keeps rallying for some reason. I continue to say the economy is not in terrible shape. And so what's nudging the Fed to cut rates? Are you looking for lower unemployment? Are you looking for the stock market to rally even more? I mean, what would be gained by a Federal Reserve
Borrowing
interest rate
costs
cut?
are insanely high in America. It's penalizing small businesses, it's penalizing homeowners. When people buy houses, they buy shit to put in the house. I mean, it's just everything is on freeze right now. So the borrowing cost, and as a small business owner, the small business borrowing costs are very high right now. So, why you lower a quarter? Okay, if you're wrong, you can't just raise. Like, why is everybody so afraid of like, oh, we can't lower? Like, can't you just assume that we lower and it has negative results? You can raise rates. Like, they're not stuck for a year. So I just don't, I think the psychological part of it to me, I just feel like this economy, the narrative has been so bad. Now that we know the tariff impact is zero, I mean, and the stock market's rallying because they believe in this new administration's policies. And they believe in this tariff strategy to some degree, the same tariff strategy that is preventing Powell from lowering rates. So that's my final piece on it, at least for now. And then let's pass it over to Chris.
Well, at
What
least
I'm
for
going to
now,
say
but
kind of,
come back in 30 seconds. So the headline that I'm going to lead off my commentary with tomorrow is how Ford Motor Company expects tariffs to impact its bottom line by $2 billion this year.
Mhm,
2 billion with a B. Now somebody's got to pay for that.
mhm.
So, and this is Ford Motors, company's management, senior management is coming out and saying it's going to cost us $2 billion this year. Well, somebody's got to pay for that. Now, granted, if you look at the tariff impact so far, I agree with you.
Zero.
If you start looking at the percent of the U.S. GDP, which is based on imports versus services and the tariffs on those imports, I think what is causing problems for a lot of people isn't necessarily the tariffs, because what difference does it make to me if I pay $1 more for my fancy French champagne? But it's the volatility of the announcements. We're going to announce this deadline like today, Mexico. Oh, we're going to postpone that. It's
right,
in, out.
a couple
And
hours ago.
It's working though. It's working by every measure. It's working. This strategy is working brilliantly. We're bringing in money. We're negotiating better deals. And I mean, unless I'm missing something, I'm looking for the counterpoint on that one because for the way I'm looking at it, it is working incredibly well. And it's making us look like idiots for not doing this before.
certainly Trump definitely wants a new global trade order, right? This is something he wanted to do the last time he was president. It's something he ran on. He got elected. He's got the mandate, in his opinion, and we're going to do this, right? We're already at a level where our tariffs are now the highest they've been since really go back to the 40s. So you plot it all out, and we're at whatever, we're above 10% in the 40s, we're 5 to 7% in the 50s and 60s, and really been at 2 to 3% really since probably the 1980s, right? And now you suddenly shoot to, I think as of right now, we're running around 12.5 or 13%. So the feelings are also, I would say, they're beginning to be felt. There's more, I think, to be reacted to. There's because, like you just mentioned, there's a lot of deals that are still not finalized, right? We've had some initial levels, they're getting changed. Deals are getting done, right? Deals are getting done. There's a lot. It's funny when we'll circle back to the Fed action too on this. When you look at what people think, and I think we talked about this last time you guys had me on the show about 4 or 5 months ago, when they do those consumer sentiment surveys on what do you think inflation will be next year and in 3 years and whatever it is, one of the questions they ask is, what's your political affiliation? And at least probably as of 3 months ago, when they put it out there, the average Democrat thought inflation was going to run at 6%.
Exactly.
The average Republican thought it would be 0.1%. And of course, the independents were in the middle. And when you look at what the market thinks, and by the market, I look at, if I want to know what can I really expect, I want to see not what does Joe or Sarah down the street think, but where are the hundreds of billions of dollars that are being wagered on inflation numbers? And you could do that. Where's that money? Like in sports betting, except it's betting on economic numbers. And that, to my mind, is going to be the most likely scenario. Even if you took a look, and again, I think it's a lot of it, and we see this all the time now, right? It's very polarizing. You've got a lot of people that hate Trump, a lot of people that love Trump, and that really that also dictates where they get news, and that dictates their opinion about how things are and what to expect. So it matters because it affects consumer behavior. But what I like to show people is that if you look at, so as a country, our consumption, about 11% of it are imports. 11% of all the money we spend consuming stuff, either because China made it, shipped it over and we bought it, or car parts from Jeep came over from Korea and this place and that place, and then they made a Jeep and 20% of it came from overseas. So anyway, the grand total is 11%. So if we look at tariffs from going an average of 2 to 3% to going up to 13, let's even call it 15%, right? Because there's some tariff levels are going to be higher, but there's a lot of things that get exempted. So if we say it's going from 3% to 15%, a 12 percentage point change, and it applies to 11% of everything that we all spend money on, you get a grand total, if everything's passed through, of 1.3% higher price levels. Not 1.3% higher inflation every single year, but really kind of one time. I don't want to use the word transitory because obviously that's a bad word to use, but in the grand scheme of things, even if all this is passed through, it isn't a huge inflationary effect. Is it some effect? It has to be some effect by definition, right? And I guess one of the reasons that you see those lower, equivalent Fed funds rates in a lot of other G7 countries is that our economy is doing well. We have some cracks deep inside the labor market for sure, but our economy is doing well. And the effect of these tariffs are lowering growth in the countries that are going to be paying them. We're the ones receiving the tariffs, right? You talked about $7 billion a month, I think, is how much historically we've been collecting in tariffs. And June's, I think, was $28 billion. That's 4 times as much. So I think in the long run, we're talking about probably $30 billion a month in tariffs, depending on where the levels all shake out at. And that's an extra almost $250 billion coming into the coffers. So that can be helpful as well. I'm kind of a free trade kind of person, but these things are all up for discussion, debate, and it's more of a reset, I think. You can't really look at it as, well, we have a trade deficit with Vietnam. This is bullcrap. They're being unfair. It's like Vietnamese people, it's called a developing country for a reason, right? The average person there can't buy the stuff that we make. People like Brazil can't. We've got a trade surplus with them. So it's part of a reset. We're not going to be able to have balanced trade with everybody. In the end, shouldn't we be happy that people give us electronics and TVs and all sorts of computer chips and we give them pieces of paper? It sounds like a pretty good deal to me. But it does help, I think, achieve Trump's goal in the long run of trying to get America to be more resilient on itself, to manufacture things, to make war weapons, to make goods, right? And not just peddle our services.
Yeah, part of a more symbolic change. Yeah, I totally agree with that. And yeah, and that's been kind of my argument from the beginning is that the Fed is over everybody. The media has been horrible with this because that's what people feed off of largely, even though it's considered mainstream media, all we've heard is, just the horror stories, has stagflation, this is going to be a disaster and this and that and that and this. And, again, imports are 11% of GDP, housing related components are 36%. So, I mean, right there. I mean, so I get it on paper, the way the Fed has lowered and raised rates in the past. Yes, maybe this current economic situation does not dictate a cut right now based on the way they've done it in the past. But I would argue, who are they? Like, I, I don't. I don't have a lot of confidence in the Federal Reserve. I just don't. And in this day and age of real-time data, AI, online sales, I don't this how we're still looking at price data from so long ago to me, it is really confusing. And yeah, I just think me and a lot of other Americans are just really losing confidence in the Fed. And are they really the best people to be shaping, policy? I know, Rob, you're big on Fed independence, and if the Fed was competent, I would agree with you. So,
You said if the Fed was competent.
yeah, but I mean, independence to incompetent people that have proved their incompetence for the last 4 years. I mean, this look at what happened in 2021. I remember screaming about it 4 months before they finally raised rates. Like it was obvious to the janitor in the Fed hallway that it was time to raise, and they still waited and waited and waited. And I just see the exact same thing happening here. I mean, I
I
hope I'm wrong. I hope I'm wrong.
I do like that we have two dissents. I think it would be really difficult for the Fed after the last couple months and being, berated by President Trump to suddenly just out of the blue cut rates when the market's not expecting it. I mean, that's going to be a non-starter, right? So I think the dissents are good. Obviously, especially in Waller, but both Waller and Bowman are people that, it's kind of like, hello, yes, I heard there's going to be an opening for chair of the Federal Reserve. I'd like to submit my name, please. So there's certainly something to be said for that, but also just that might be their opinion, right? All these people that are on the Federal Reserve Board, all the presidents of all the Federal Reserve branches, they've got their teams of economists and analysts and their own data for their own region. And so it's kind of, a lot of whether it's the Bank of England or the ECB, dissent doesn't happen nearly as much at the FOMC as it does in some of the our other G7 partners equivalent meetings. But I think it's a good and it's a healthy thing, right? We should be talking about these things. It shouldn't just be some group think. The chairman of the Federal Reserve isn't the king of it, right? It's not one person. It's 12 people get to vote on it. So, the idea that, Powell, you better do this or else, you're a dummy and you're whatever other words he gets called on X. In the end, there's 12 votes. And by the way, the whole Fed pressure thing, right? This isn't new at all, right? You take now, of course, again, Trump has his own way of doing those things, but that Fed pressure is, I think what back in was it 1951, Truman had William Martin, who ended up serving for 20 years, longest serving Fed chair. And 1951, Truman brings him on, and I think it's about 6 months later, he hikes rates 50 basis points. And Truman called him a traitor, publicly a traitor. For he's like, dude, what are you doing here? I brought you on here and you hike rates on me. So every president, right, wants rates to be lowered. Lyndon Johnson, 1965, same William Martin as the Fed chair. He heard that they were gonna hike rates, and he called him into his office. And literally, I'm not exaggerating, he said, "You know what you do if you hike rates? You're gonna literally squeeze the blood out of every hardworking American in this country." And then about, I think it was December, he actually did it. He hiked rates again, got summoned to Lyndon Johnson's ranch down in Texas, and got berated. According to some different accounts, it was physical. He was actually physically kind of slapped around. So that's been going on around. Nixon, Arthur Burns, back in 1970, when we finally replaced Martin, 72, right before the election, Richard Nixon said, "Hey, I really need some help here. We need rates lowered, not raised." So Arthur Burns comes in, keeps rates low in 1972. They stay low, and of course, what do we get? We get inflation that starts to run away from us. So Paul Volcker had the same thing where, he goes to interview with Jimmy Carter, and he says, "Well, it's 1979. I think if you appoint me to this, We're going to focus on inflation for the number one goal. We want to be an independent Fed, and I'm going to be more restrictive than my predecessors. So he comes back and he tells his friends afterwards, they're like, hey, how'd the interview go? He goes, pretty sure I tanked it. I'm not getting the job. So he was pretty surprised when he actually got the job by Jimmy Carter, and was revered for having actually broke the back of inflation. So this has happened time and time again. It happened with Reagan in '84 with Volcker, where Reagan, I think this is in '85. Reagan actually got a bunch of the Fed governors who he had appointed to send essentially what amounted to a letter to Volcker that said, hey, we're all gonna vote to cut rates. Volcker was pissed as hell, and he called up Secretary Baker, Treasury Secretary, and said, I'm going to resign tomorrow afternoon. I'm not having this. So they all kind of freaked out because Paul Volcker was so revered, and said, hey, sorry, don't worry, we won't do this. So we'll all act in concert together. So
I think, Chris, you bring up some fantastic points. The thing that I find interesting, being a very amateur historian, is that so much of what you've talked about, we learn about months later, years later, decades later. What I don't think the market is accustomed to is a president that talks about his Fed president so openly as we're seeing now. And when I talk to people about that, they say, "Oh, that's just Donald Trump. That's just Trump being Trump. Oh, that's his negotiating style." He throws that out there and then he retracts. And I think that the traders that I've spoken to in recent months who, follow this kind of thing, they say after a while, you just become immune to whatever Donald Trump has to say about Jerome Powell, because you're right. Jerome Powell is, everyone points at Powell, 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 but the Federal Reserve Open Market Committee has plenty of members. And so I think it is healthy that a couple dissented, and we'll see what happens. I think the Federal Reserve will continue to look at the data, and it could very well cut rates in September, but it'll be on a vote. It's not going to be Jerome Powell calling each one and saying, you need to cut or you need to leave it alone. They're all independent thinkers. And you're right. They all have staffs and they all have different districts that are behaving differently in this kind of economy. Jerome Powell has become the whipping boy, unfortunately, for what's going on here. And I think, like I said, the traders that I've spoken to, the MBS traders especially, are like, God, we're tired of, Trump berating Powell, so we don't even pay attention to it anymore.
White noise. So
yes.
This is The Big Picture, presented and sponsored by our great friends at Depth. Nearly 2 decades of serving as the marketing and communication partners for leading fintechs, and doing a great job. Kerry Milam, Leslie Colley, and Lindsay Neal. Check them out at depthpr.com. On to more positive.
Hold on.
Yeah. Go ahead. Yes, Rep.
Chris, what was in that bottle?
Oh, Circle? You guys ever seen the commercials for those?
That?
It was the first I had heard of it when you mentioned this to me. What is
yeah, they've got you know what it is? It's a refreshing and delicious way to enjoy your water, stay hydrated. So what's in here is just regular water. You fill it up from the tap, and the flavor is right in here.
Okay.
So you get one of these flavor packs. It costs, I think, $3. You can fill up 6 full water bottles with them. Sugar-free, calorie-free, all sorts of flavors to choose from. I started doing it. I probably drink 2 times more water than I did before. So, and it's Circle, CIRKUL. They come in there's a 32-ounce one that's a thermos. I put that full of water and ice, and 24 hours later, after a hot car, it's still ice cold. Couldn't recommend it more highly.
Has that been approved by the FDA? Does the FDA still exist? I don't even know.
I'm not sure if it does or not.
Got rid of them. They're down to 4 employees, I think now. Yeah.
Right. 5 guys on a phone. Yeah.
Onto more positive news. We are starting to see some positive rays of hope, and just in terms of bipartisan action on housing bills. I did a quick ChatGPT before the show. There are 6 active bills in Congress right now, all bipartisan, all related to housing and housing affordability issues. The most notable, the Road to Housing Act, which co-sponsored in the Senate Banking Committee by Tim Scott and Elizabeth Warren. And it passed through the Senate Banking Committee 24-0. And there's a lot of good stuff in this. A lot of stuff we've screamed about for years. Being able to actually make commission on low loan amounts, like why? Like, my God, finally, this max points, that trigger like high cost lending on low loan amounts that just essentially worked for community banks for 20 years. I can speak like community banks terrified of compliance and, these high cost laws. So some stuff to encourage more low dollar lending. And a bunch of other stuff in there. But Rob, I don't know if you followed any of that, or you've received any feedback on any of that from any of your readers, some of those developments.
Yeah, I got it. Hats off to you again, Rich, for knowing that there are 6 live bills that are being discussed. Now, the critics will say, well, the ratio of bills that actually end up on the president's desk versus those that are being, those that get talked about in the Senate or in the House is very, very small. But the fact that there are 6 out there and some of them are bipartisan, that's nice to see. Um, but once again, going back to what I was saying earlier, the mortgage industry can only do so much, and the MBA's out there chugging, and the state and regional organizations are out there chugging and trying to do what they can. But whether they butt up against a system where a sewer hookup costs $20,000, or a approval process, or Edna at the local recorder's office not taking e-notes. I mean, whatever it might be, we can only do so much. So hopefully, at the federal level, some of these bills make sense and help. But it'll be interesting because the builders have scaled back. The builders now, granted, I hear different news, but it seems to me that builders have scaled back their building because they can't sell what they have. Inventory has increased. Existing home sales, existing homes aren't selling as fast as in the past, and so the affordability keeps coming back to affordability. And good loan officers that I talk to, it's not a rate discussion that they have with a potential new borrower. It's okay, what areas are you looking in? Have you talked to an insurance agent? Is there an HOA? Is this a condominium that you're looking at? What do the condominium's finances look like? They talk about almost everything except interest rates. And so the affordability issues that we as an industry deal with, and oftentimes unfairly get blamed um, on, are, I think there's plenty of blame to go around regarding some of the housing issues that we continue to see.
Yeah, and you've made the point several times. It's so true. It's much more than just rates. I mean, it's the insurance piece of it, other elevated costs to housing right now, and it's another thing I always look at, like like even this morning's PCE number. Like if you take housing related components out of core, it was under 2%. So I think there's some of that stuff too, that the housing, it's kind of like it's I don't know, Chris, your thoughts. I mean, it's this double-edged sword, right? I mean, there are still legitimate inflation fears out there, yet a lot of it is, housing related. That said, lowering Fed funds rates doesn't mean mortgage rates are going to come down. It's like, any thoughts on this dance that the Fed kind of has to walk, where housing is a big component to inflation, yet, the Fed funds rate and the correlation.
It is. A lot of times it gets looked at. You talked about there's a lot of data we get that's pretty backwards looking data, right? It's not. And so I think, the couple of dissents we have from the Fed are not about, hey, unemployment's 4.1%, we're fine. It's looking at the detail behind some of the things that are little cracks that are showing that labor market. So you're right. It's difficult when you've got, one of the CPI components really lagging. If that wasn't really lagging, maybe the Fed would have acted earlier in 2021, or early, actually really in 2021. It's tough. It's the inventory problem of just not having enough homes, period. Doesn't solve itself quickly, right? And it has to do with all those things you just mentioned. $20,000 for a sewer hookup. All these little restrictions. I mean, Yeah, I haven't been able to see all the detailed parts of this bill, but it's certainly helpful, right? And it's certainly glad to see it be bipartisan when so often so very little gets done out of Congress.
And I feel like for a bill, and this is a big bill with a lot of
Yep.
stuff in it, for it to come out of Senate banking 24 nothing, I feel like Tim Scott and Elizabeth Warren are saying, like, listen, we have got to have this come out unanimous as a sign and a signal. Listen, we are ready to start working together. Is Americans are hurting right now, housing wise. If you need or want to buy a house in America, it's very difficult right now. More inventory, much at the high end. So it's my hope, that is a sign that we're going to see progress. We talked about it all during the election. Like it was the only thing that the two sides agreed on during
Right.
was
And I do think we
housing
get to,
affordability and issues. So
and if we get to the point where we can, I don't know if you call it the easing cycle ended and starting a new one, or just a big pause in the current easing cycle. I do think it helps mortgage rates on the kind of on the borderlines, right? So it's not a basis point for basis point drop,
yeah.
but mortgage rates, we kind of, we don't have really our yield curve that we have is really like this yield bowl, right? We've got Fed funds at 440 essentially, the 10-year at 440, and then down at the bottom of the bowl, the 2-year and 5-year at 390. So it's this weird kind of bowl. And if the projections for if mortgage-backed security rates are based on what do I expect the Fed funds rate to be for the next 5 months, sorry, the next 5 years, and the market's perception about that changes to, hey, we can slowly get down to a more neutral long run Fed funds level at 3%. That definitely helps mortgage rates. Again, it's not by a full percentage point, but it might be by at least a half. So I think there's certainly benefits to the affordability part for that as well.
Hey, Chris, do you know anybody at Bureau of Labor Statistics?
I don't personally know anybody in there. No.
Rich,
You know,
know anybody?
I don't, but I did look up before the show. The CPI and PPI, they've been calculating them the same way since 1978. It may be the right way to calculate them. Just an observation. It
they
may be.
do change the basket at least.
I mean, yeah.
They don't still look at the price of VCRs and how much that's changed.
PCE 1959, the same method of calculation. And again, I'm not saying it's wrong. I'm just saying it bears noting, is all.
I have a great speaking of that, Chris, I have a great trivia question coming up. I don't know if I'm going to run it tomorrow or Monday or Tuesday, but these people who think their companies will be around forever, think again. And there was a company. This is the trivia question. I'm giving everybody a little head start here. There was a company that had over 9,000 stores in 1994, and now only has one.
Wow.
But I know it. Can I say it or should I not? I don't want to give anything. I
Here
won't
come
say
the
it.
answers. Here come the answers flying
Yeah.
in. I'm not going to
Blockbuster.
say, but
Is it
it's really
Blockbuster?
interesting.
Blockbuster.
Is it Blockbuster? Is that the right answer, Rob? Yeah.
And the one is basically an
9,000.
Airbnb if you want to stay in their store, if you want to spend the night and watch movies.
Is that what the last remaining location is?
Yep.
Interesting.
Bend, Oregon.
Yep.
Interesting. So,
Anyway, nothing lasts forever, it seems. So, yeah, I don't know, Rich. That's a good bit of trivia there. The fact that we haven't changed the measure of inflation since what year? Since
CPI and PPI 1978, PCE 1959. Now, what they did say is this on CPI and PPI, the survey that they send out is updated roughly every 2 years. It did say. The actual survey, but the method of calculation and kind of how they're getting the data has been the same for a while. So something we've been talking about on this show for honestly damn near a decade. Just something that's always been curious to me. But
You can't really call people's home phones anymore, or at least you can, but you're not going to get a representative sample of the population, right?
I think, like this AI council that Trump's putting together, they should have these guys look at like honestly price and employment data. I mean, they really should. I mean, there's got to be, you can't maybe go all the real time data, but I do feel like there needs to be more real. I just watch how like real businesses use real time data to help them navigate and grow. And this huge business with so many stakes, the Federal Reserve essentially, continues to use, just methods that have been the same for a while.
It should get better once they have the new building. That's what Powell said.
I keep waiting for conversion to the metric system. Makes all the sense in the world, but here we are stuck in something from England from 1400 or whatever.
You know, and Americans will do about anything to avoid using the metric system, right? They'd be like, "Oh yeah, this was the size of 4 elephants," right? We won't even use we won't even use pounds or or feet. We'll describe it with animals or bananas or the things like that. It's kind of the American way.
Yeah, I use Fortnite regularly, and people look at me like I'm nuts.
A ton of stuff in the chat. People calling for Chris to get a four-timer jacket, asking where his Michigan shirt is. Affordability is the issue. Mortgage rates could be improved overnight if LL. Yeah, and that's the other thing too, is like, LLPAs and G fees could be another way to seriously, help housing affordability. But it's never going to happen with them taking them out of conservatorship. Never in a million years. There's 0% chance, right, Chris? I can't see any percent chance if they're going to take these things public. But now you have said, like Trump's last comment on the GSEs was, well, we don't know anymore. It was a different tone and a different, so I don't know. I don't know. That means something
It does.
It,
I
mean,
think
it
it's
meant
just
that Bill Ackman sold his stock before Trump said that.
that could be it, honestly.
I think it's that it just I think it's something they want to do and it's a goal. But on the priority list right now, there's bigger fish, I think, for the administration to fry. And so that's out there, but it's not something that's going to get done in 2025 or probably 2026 either.
It would be such an easy fix. I mean, if you were, the Fannie and Freddie are making just billions and billions of dollars every month. I mean, just 20 basis point shave off these ridiculous 75, 85 basis point G fees. I mean, that's in rate.
Well, and for the longest time, really, if you look at, the 90s, up until they were taken into conservatorship, the average guarantee fee they were charging was in a lot of cases only around 15 basis points. Remember, 15 basis points.
I remember working with you. Yeah. You would
So,
help me like understand my embedded G fee pricing and my cash pricing. Talked on the show before. I negotiated at one point my G fee with Fannie or Freddie down to 17 basis points as a 27-year-old. I was, like a memorable moment of my career. But now they're by most accounts, the mid to high 70s. And that's again.
Yeah, when you include the LLPA. Right, exactly. And that's in rate. So that's 100. And you know what? And back then, the agencies were making a lot of money too. And it wasn't just smoke and mirrors. It doesn't take a whole lot to be really profitable. And right now it's kind of, we need to create instances where other companies can pivot onto, whether it's, I don't know, a Chase or a Citi or a Wells Fargo or other big investment bank to be able to use the existing UMBS platform that we have. One of the big reasons that they went with the uniform mortgage-backed security is that Fannie could issue it, Freddie could issue it, and later on they could open up to other people. Competition makes prices lower in every single industry there is in the country, right? And mortgage lending's no different.
Yeah, which is why so many people, Audrey, who's viewing this included, why so many originators have drifted or moved toward non-QM or non-agency loans that don't have G fees, for example. And that when you look at the loan level price adjustments, especially for some of the non-owner products, I mean, they beat the agency products. And so the market has drifted that way.
Exactly. I mean, I want to say, like, if you're like 719 FICO and 25% down, it's like a point or something, LLPA. Like, that's why. Like, your credit score's over 700, you're putting 25.
And you have 25% equity.
The
Yeah.
federal government's charging you an extra 1% of your loan amount. Like, for what? You're putting down 25%. Yeah, and that would be an easy fix. And that's part of why that's the biggest point of confliction I have with, a push to take the GSEs public now, because the quickest and easiest path to affordability relief would be through reducing G fees and reducing LLPAs, which could be done tomorrow, literally. So,
yeah, I've talked about how if they're released from conservatorship, obviously the big thing is what is that going to do to rates? And I continue to say that non-agency lenders that are out there and investors are licking their chops, hoping for some event that makes conventional conforming rates worse, because it'll make them look better.
Love it. My guy Brent Hines down in Columbus even agrees. So big Iowa fan, Brent. And
When does the college season, football season start? Are they in practice sessions now?
September 13th, Ohio State, Texas opener. Who does
So
Michigan
2 weeks.
open this year, Chris? Do they have a big it's a couple weeks, yep. Or no, it's
Yeah.
September. It's still some weeks away. So
Oh, I'm sorry, August. Yeah, forgot all about August. So it's not till September. When does the pro season start?
early September, I think.
The
Yeah.
same.
Tonight's the first preseason game, the Hall of Fame Bowl, which is actually the Lions and the Chargers.
That's right. That's tonight. Yeah, absolutely. Yep.
Right.
Wait a minute. So they're already having pro games, and the college season doesn't start for like a month and a half.
Oh, my guy Sean,
Preseason games, though.
August 23, Iowa State, Kansas State. It looks like is the first game. Oh, in Dublin, Ireland. That's cool. So, and who do the Wolverines? Who's the Wolverines' big early season non-conference game?
I should know, and I don't allow myself to think about football during the summer because I really just want to enjoy summer, and
Yeah,
football makes me think of fall.
probably a good policy. So,
Hey, by the way, one thing I wanted to mention, we talked about yield curves and guarantee fees and lending. One of the things a lot of people don't realize that I want to bring up is 5/1 Ginnie Mae ARMs, FHA and VA ARMs. A lot of people kind of think, hey, nobody's written ARMs in 15 years. They're really on the up and up now that the yield curve's no longer inverted. We have this yield bowl now.
yeah.
I mean, 5 coupon, 5/1 Ginnie ARM is at par. So if you look at a regular 30-year Ginnie Mae security, it's 5.5 is at par. You can get 5% at par if you go with a 5/1 ARM, and it's actually become popular. It's in what was that for July? Almost $500 billion worth of. I'm sorry, $500 million worth of those securities got issued. So
I'm glad you brought that up. That's all. That's great to hear. And it's not surprising that that's getting traction because 2% savings on what home prices are today for the first 5 years. I mean, that's pretty powerful. And if you got a refi in year 6 or 7, damn. I mean,
a
that's
big help for affordability. Yeah, it's not gonna help you much if you're a 620 score and investors want to put kind of hits on that because of the risk. But boy, especially for VA borrowers with good credit, FHA borrowers too with good credit, can be a great option.
So, Chris, are you seeing that at credit unions and banks, or are there actual investors out there that are buying these things?
Anybody who's making mortgage-backed securities, right? And then of course, the aggregators are throwing that pricing through. Just a lot of times, it's not on a lot of originators' radars because they haven't been used to taking a look at the ARM option in so long.
and that's
I'm
Fannie.
going to call that the Swerbinsky plan.
These
Forget
are
the
these
whole
are Ginnie
tax
ARMs.
thing.
Yep.
I mean,
So,
you get a 5/1 ARM. The Fed comes in, lowers rates down to 1% or 2%. Interest rates eventually drop, and then you refi that 5/1 into a 30-year fixed.
Yeah, it's
That should be an LO.
that's great to hear that the 5/1 Ginny arm market has come back.
really taken off. Like I said, almost 500 million in just the last month.
Man, that's a positive sign, and yeah, if that could help a ton too. I mean, because that's not some kind of that's fixed for 5 years.
Yeah. Yep. Yeah. Even if interest rates do go up,
Mhm.
by the time it's time to have your rate adjust, you've got yourself on pretty solid footing, hopefully.
Yeah, and a lot of savings and
Mhm.
interest. Yeah, so. Well, good stuff. As always, great conversation. Chris, want to thank you so much for coming back on again. And per usual, get me a date, in that, November, December time frame. We love having you on quarterly here in the jungle. You do such a good job just explaining all this crap in a way that is easy to understand. And our listeners love it. So thank you so much.
At
Hey,
that time,
much
at that time,
appreciated.
Chris, the Fed will be weighing its second rate cut.
Yep.
And
Could
you
be
guys are
later.
on a panel together at the MMLA conference next week. I saw that. So there you go. So it'll be
We're
fun.
giving away puppies. We're giving away puppies to
We
try to
are.
boost the attendance.
It's like Oprah show, right? You get a puppy. You get a puppy. You get a puppy.
Well, good stuff. Thanks to all of you for taking part of your week out to spend some time with us here on Thursday afternoons. If you're listening to this on Pod or YouTube, join the live. I usually have just close to a couple hundred live, which we had today. So you can go to chrismancommentary.com to get signed up for the live. And Rob, thank you, as always, for joining us this week, and to our guest, Chris, for once again joining us.
Thank you. Thanks everybody else
Thank
for coming
you.
out
Thank
too.
you.
All right. Have a great rest of the week, everyone. We'll see you next Thursday. Take care.
See you guys.